right? The fact that you've been sued alone is going to trigger what could potentially be a huge cost to you if you have to pay an attorney an hourly rate to defend you to the point where the case gets dismissed, right? So the liability part of this is actually what, again, in general, that liability risk is that risk that is really volatile, very volatile, right? A much more significant risk to us as individuals and to businesses in general than the property exposure is necessarily. So let's talk about, just like we had 4 parts to that homeowner's contract to help people manage their property risk, liability adds a couple new parts, all right? Parts E and F. The first one is personal liability, bodily injury, property damage, and the biggest component, the biggest benefit that you get probably is the coverage that the policy provides you for defense expenses, right? Those defense costs. So it's paying for the compensatory damages that we discussed before, right? That you might legally owe to somebody else. But it's also picking up those defense expenses which aren't considered compensatory awards or compensatory damages. Now, oftentimes, the defense expenses can exceed the compensatory damages that you pay. You know, you defend a case for a certain amount of time, and you're spending $150 an hour, depending on where you live, on defending yourself, and you spend 6 months defending yourself in a liability claim, and ultimately settle that case for $10,000, right? The compensatory award, or the compensatory settlement, the bodily injury property damage piece of this, is the $10,000, right? But you imagine $150 an hour over a 6-month period to get you to that point where you settle the case, it's going to be much greater than $10,000. Now, the added benefit of these contracts is that the limit of insurance that you buy on that liability coverage that you own, that limit only applies to the bodily injury property damage compensatory stuff. Right? That's only a limit for those particular damages. For defense costs, in terms of what the insurance contract will pay, as long as your limit is, has not been otherwise exhausted, the insurance company will pay an unlimited amount to defend you. And in fact, the amount that the insurance company spends to defend you does not exhaust your limit that's intended to pay for these damages. Does everybody follow me on that? So if you have a $100,000 limit on your liability insurance for your homeowners, right, and somebody slips and falls in front of your house and they sue you, and the insurance company spends $150,000 to defend you to the point where you settle it for $50,000, right? How much of the settlement will your insurance policy pay? 50 grand, right? Because the 50 is below the $100,000 limit. How much of the defense expenses will the insurance company pay? Everything, right? Because again, the defense costs are outside of the limit that you have that is intended to really just limit the amount the policy is responsible to pay for the damages piece. Okay? Questions about that?
And that's only if you're being sued for something covered in your insurance.
That's only for when you're being sued for something covered by the insurance policy. Exactly. The assumption along all this stuff is that it's got to be a covered claim to begin with. Otherwise, they just deny the claim outright, and hence they don't have to pay the defense expenses either. Right?
I guess I'm trying to ask from like when would it get to the point, because when the insurance company initially decide to sell or defend anyway, so how do you get to that point? What they have like a legal consultant that would say, yeah, we should defend or settle.
They do. They have a defense strategy, depending on the facts of the case, right? Which they might not understand fully what that strategy should be until they're somewhat into the discovery process of what the facts actually are. But maybe 6 months into a case, the insurance company is saying, I think this is a dog. We should settle this. We shouldn't take this case to trial. This is not a good one to test before a jury, for example. Right? So they might make an economic decision to settle the case. But the defense expenses are still going to be covered as long as they're agreeing to cover the damages piece.
So the defense,
Go ahead.
the defense expenses, basically it's just saying the defense expenses are not included as part of the limit.
That's exactly right. That's all right. We talked about, I mentioned that the med pay is a per person limit. The personal liability part is a per occurrence limit. Now in the commercial world, with commercial insurance, occurrence plays a really important part, but it's equally important in like the homeowner's policy. An occurrence, think about an occurrence as being, like an accident, per accident. So the limit that you buy for that personal liability part of your liability coverage applies per accident regardless of how many people might be injured as a result of that accident. Okay? And that's important because if you buy like a $100,000 limit and there is an accident that you may be legally responsible for that injures 3 people, it dilutes the amount of coverage that you have for each individual claim. Right? In other words, that $100,000 limit, if all 3 of these people are injured as a result of the same event, the same occurrence, then that $100,000 limit is going to be shared by all 3 parties. There's a greater chance that you're going to be, responsible for some amount of damages exceeding that limit. All right. Questions about that?
You usually see like kind of that F over E kind of thing in the declarations. Part of the insurance policy, like a per person limit and a per occurrence. Well, I guess it's more I'm relating to vehicle insurance.
Yeah, it won't. This will just show. It'll show up on the deck pages E and F, and it'll say $100,000 per occurrence, and for F it'll say $5,000 per person. Right? It'll identify what those limits are, but they're outside of that. They're completely independent of one another. Another condition of the policy, duties after occurrence. We talked about duties and we talked about other insurance, so there's no need to really belabor that. It's really the same things when we talked about policy conditions in general, right? Notify them of a loss. It's not, here's an important part of this. It's not just notifying the insurance company of a claim. It's notifying them of an occurrence. So this occurrence definition crops up again. An occurrence, again, if you think about it as being an event or an accident, it changes what your responsibility is under the policy. I mean, if it were simply notify us of a claim as soon as possible, well, that's fairly easy for you to satisfy as a condition of the coverage because you really don't have to notify them of anything until you've actually been, handed a claim, until somebody's actually officially made a claim against you, right? It's really fuzzy when we're talking about notifying them of an occurrence. Because if an occurrence is an event, the person slips and falls in front of your house. That's an event. That's an occurrence. That's an occurrence that can give rise ultimately to some legal claim against you in the future, right? What are your responsibilities as the policyholder to notify the insurance company of that slip and fall? Even if the person gets up, dusts himself off and says, nah, I think I'm okay. I feel all right. It was no big deal. He's a little embarrassed, so he's not admitting anything, right? And so, he goes his own way. You go back in your house and you think, all right, cool. I don't have to say anything to my insurance company. I don't think it's going to amount to anything, right? That's an occurrence, right? Technically, you have a responsibility to notify your insurance company that that thing just took place. Now, if the statute of limitations for a bodily injury claim in many jurisdictions is 2 years. So 1 year and 11 months after that person slips in front of your house, serves you with a summons and complaint, suing you for the condition of your property that gave rise to the fall, your negligence, and they're experiencing some soft tissue injuries. They've got some stiffness in their back. They've got some other problems that's caused them to have to miss work. They're having migraines. They can't work. They're disabled now. They've got some disability payments that they need to satisfy, lost income. So it spirals to this point that 1 year and 11 months later, they finally file a lawsuit against you. Now, at that point, you submit that claim to your insurance company, having never notified them of the occurrence. right? In most courts, they're going to find that you've breached that condition of the policy. And what is a consequence of a policyholder breaching a policy condition? They won't be covered, right? They won't be covered. So it's really a fine line. And I get it. It's, should I report this slip and fall? Well, the problem is, if I report it to my insurance company that somebody just slipped and fell, they're going to investigate. And sometimes the investigation itself will plant the seed in that person to file the claim. So it's kind of a chicken and egg thing, right? Which comes first? Yeah. Many people operate businesses on the side from their home, right? It could be maybe you operate a tax service out of your house during tax season. Maybe you operate a small little daycare operation just to generate some extra money because you're a stay-at-home parent to begin with, so why not take an additional 20 kids? The problem is that the insurance company that's underwriting this contract, are they contemplating that risk of you having 20 kids in your home? No. Are they anticipating having, you know, clients that are, for whom you're doing taxes come into your house? No. And what's the important aspect about you running a business versus having just people over as social guests?
They're all invitees.
They are all invitees, right? They're no longer just simply people licensed to be on your property. You're collecting money from these folks, right? You are financially benefiting from their presence, which means, as we all know from the test, I hope, that you have a higher standard of care that you owe to those people. The likelihood of you being liable for injuries to those folks is much greater. The insurance company is not charging you a premium that is commensurate with that risk, right, at the end of the day. If you expect to, put it this way, if you expect to be insured for a liability claim because of the business, then you should make sure that your insurance company realizes that you've got this business. Now we'll talk about endorsements, you can add that to your policy.
I was going to take the work for the company, I'm actually not conducting business.
You're just operating out of your house.
Yes.
That is,
I'm going to go to my company and see if they have anything for that.
yeah, and your company, you should be covered as an employee under your company's general liability policy. Because the definition of insured with the business liability contracts includes employees while they're acting on behalf of the employer. So you should be good. It's really when you're acting as a sole proprietor, kind of running your own business, that this really becomes important.